Hello, and welcome to DC Velocity's Thought Leadership Series, produced in conjunction with MHI. My name is Mark Solomon. I'm Senior Editor at DC Velocity Magazine. We are pleased today to be joined by Jason Schenker. Jason is President and Chief Economist of Prestige Economics, based in Austin, Texas, a boutique economics consulting firm that he founded in 2009. Prior to that, Jason worked as a risk specialist at McKinsey & Company, and prior to that, he was at the Wachovia investment arm?
Yeah, I was in the corporate investment.
Corporate investment arm,
yes.
Okay. Thank you for joining us, Jason.
Thank you, pleasure to be here.
Thank you. You made a presentation here talking about the macro outlook and its impact on the material handling sector. How about for our viewers summing up what you said and the impact this will have on the industry?
Sure, I think there are a few big takeaways. I mean, the first thing is, if we look at the U.S. economy, things are pretty good. This is year 5 in a row of what I call getting rich slowly. The U.S. economy shows modest growth. We expect that for a few years to come. So things are pretty good for the U.S. They're going to continue to be modestly positive, and that's good. Internationally, there's a bit more risk. There's some more downside for Europe and for China. And then sort of the third thing is that for cost implications for the material handling industry, while growth in the U.S. is positive, there's also likely to be Fed funds rate hikes in 2015, making LIBOR plus costs more expensive. You're also looking at a labor market that continues to tighten. As of right now, we're technically in that full employment range. It's only going to get tighter as the labor market continues to improve, so more costs there. Raw materials costs relatively benign for the next 3 to 6 months, but as we move further into 2015, if Europe and China continue to grow, then there's some upside price risk there as well.
Do the pros of an sustainable economic recovery in the U.S. outweigh the negatives of higher input costs?
Yes, I think so. And you know, the reason you're seeing higher labor costs is because the economy is growing. And the truth is, the more people you hire, the more goods they're going to demand. And that means more material handling needs to be done. So although you might pay more for the labor, you should also see even a larger, each one of those people that gets hired will be spending money on goods that need to be handled at some point in the supply chain. So for material handling, this is a good part in the cycle. Any kind of period where there's growth, any kind of period where there's hiring, even though there might be some additional incremental costs, there's going to be incremental additional demand that should outweigh that.
If you look beyond 2015, do you see pretty much the same picture unfolding for 2-3 years out?
I do. I see really not until mid-2017 do I see pretty good things until that point. I think the Fed's going to have to continue to raise rates, and at some point there will be a recession or an adjustment from that. Sometime between mid-17 and mid-2018, I think that's the most likely time period for something like that.
Okay. What will it take for the economy to return to, and maybe it can't, maybe this, is this the new, I hate to use the term new normal, but is this what we are looking for the foreseeable future?
Well, yes, I think this is probably what we're looking for. The risk is if growth were to accelerate quicker. So right now we're looking 2.5% GDP. Maybe next year it's a little bit more, 2.5 to 3. If we started to see much higher growth rates, that would mean the economy is overheating. There would be a bullwhip effect in the supply chain. You'd build overcapacity, and then it would be only a matter of quarters before you end up in a recession. And so eventually there will be more heat. And I think when we look at 16, 17, there's more upside risk in the U.S. But as you see more growth upside risk, it's not a sustainable upside. It's something that eventually leads to a contraction because of an overbuilt capacity throughout the economy.
Are we looking at, especially not that far removed from the crisis and recession, are we looking at a close to a Goldilocks environment in the U.S.?
Well, we've had that getting rich slowly story going for, this is year 5, next year's year 6. You know, that's a pretty good, that's a pretty good place to be, right? It's not super hot, but it's the downside seems relatively minimal at the time. So things are pretty good, and Goldilocks is one way we could look at that. I think that this is probably sustainable for a while. The only problem is that at some point, as the labor market gets tighter and there's more hiring and companies continue to build, the economy builds on itself, and that's where you get the bigger boom, which eventually leads to The next recession likely to be more of a minor bust rather than what we just had, the Great Recession.
Last question, what message did you leave for the audience here, which are almost exclusively manufacturers of material handling equipment?
Yeah, I think right now we're looking at pretty good times for the next 3 years out. Things should be pretty good. It's going to be a time of expansion, more people purchasing more goods, more companies needing to buy more material handling equipment. These are pretty good times domestically. Internationally, the next 3 to 6 months could be much more difficult. So that's the story. In the U.S., things are pretty good. Overseas right now, a little touch and go.
Okay, Jason, thank you.
Thank you, Mark.